All right, welcome everybody. September 2nd, 2022, first Friday of September. Ben,
That's right. Yes,
I'm excited for September. I love fall. It smells like fallout, you know?
it does. It
Hey, like
does.
you go out in the morning or at night, it just has that crisp air, right?
Yeah, you like that, eh?
Oh, I love it. I know you like the heat.
Yeah,
I
exactly.
just I just love that the crispness of it.
That's good. That's true. It's
Yeah,
nice
it is nice. We're ready for it.
for a day, for one day.
We're ready for it. Okay, well, we're a few minutes late starting here. We had some technical difficulties with the link, so I think we're back on track here now. So let's just jump right into it.
Sure.
Um, Tell us about the week. What happened in the market? Seems like it was pretty slow on our end from trading and stuff like that. It was a
Yeah,
little slower than normal.
yeah. I think there was lots of people out of the office this week. Certainly, as the contact was a little bit lower and quieter than usual. Still lots happening in the markets. The data is still piling through here, and as we enter September, it's a pretty material change from central banks. But from an activity perspective, trading perspective, lots of people away. We had our first in-person client meetings in our office this week. That was a big thing, right?
Yeah, I like that actually. Yeah, it was
Yeah.
good.
Yeah, so that was good. But from activity perspective, yeah, it was a little bit different than a lot of the weeks we have. But getting into September, lots of things to cover here.
For sure.
Yep.
Yeah, the headline here, I'm just reading some online.
Sure.
Major averages slide for third week. NASDAQ posts 6-day losing streak.
Yeah.
Is that what you're seeing?
Oh yeah, for sure. I mean, if you I think about yesterday, September 1st, just a summary of August, and you look at pretty much every metric I put up there showed a negative number in August. So that was everything except for the U.S. dollar was negative in August, and so growth really has been something that probably I didn't fully kind of get behind how material that movement in rates had an impact on growth. So certainly as rates have started to tick back up, you're seeing growth come under pressure again. And so to your point there about the NASDAQ, yeah, it's really a reflection of a kind of rate pressure moving higher. You had Powell speaking last week, of course, with the view that we'll continue to push hard on raising rates to dampen out inflation. So with that continued narrative, you saw continued pressure on risk assets, and stocks would be kind of the easiest place to look for risk assets going lower. So certainly see that. And as I mentioned, I think in yesterday's daily as well, some of these companies are down big time. Like even the big cap companies like Intel, another new 52-week low again today, 3106 it touched, trading at kind of 6 times earnings, close to a 5% dividend now. But so even the big cap companies have come under pressure. And so, as I mentioned yesterday in my daily, a lot of these things feel a bit like 2008, a bit like 2001. Like these things are just getting sold and just let's get rid of them. I can't take it anymore, type of action. And these are capitulation type moves. I think we still have lots of ground to cover as rates and quantitative tightening start to kick in earnest. But some of these companies are just getting kicked to the curb.
For sure. Before we move
Yeah.
on there, maybe you can just sounds like you're just on the speaker there. I don't know if you can switch your mic or
Okay.
not.
All right. All right.
Yeah, I mean, like you said, as you do that, like you said, I think people are just kind of tired of it. Things moving down and right, just selling off. But that's most cases probably not the right move, right?
Definitely not. Is that
Yeah,
better
that's
from
better.
Sam's perspective?
Yep,
Yeah.
much better.
Yeah.
Yeah.
Yeah, it's not the thing to do, but it is feel like sometimes it feels better to do that.
Hmm.
Just, people just want to get rid of it and drive on. But, I think as I've had lots of conversations over the last many weeks with research and individuals, I think, if you look at some of these companies and you say, what's the likelihood that they're trading at these levels in the next 18, 24, 36 months? And if you take that kind of framework and kind of pull it back a little bit, yeah, I think almost 90% of the time I've asked somebody that question, they say a lot higher when I reference a business like Intel, for example. If you pull it back and say, well, maybe we correct a little bit more on this, it's down 50, almost 50% from its highs. Um, could it correct further? Certainly. But is Intel going away? Not at all. I mean, it's a good, high quality business. They make semiconductors, which they need. They're moving a lot of their manufacturing back to the United States, which is good. So, yeah, I haven't started buying it yet, but these are the things that you look at and you say, what's the appropriate thing to do right now? And the further lower it goes, the much less risk there is in it. And so these are really important things to follow over the next 6 weeks, I think.
Yeah. So you mentioned you're not buying them yet, but so what? Anything happen in the portfolios this week, or just kind of standing pat for now?
Standing pat for now. As I say, the closer and the longer this thing goes, the more and more comfort I get in adding to the positions and starting to buy them. So not quite ready to pull the trigger just yet. Like September has always been a pretty rocky month as all the traders come back to work, and this particular one is more important because this might be the last month that they raise rates in the US and Canada, and at the same time they're doubling their quantitative tightening in the US, so they're going from 45 billion a month runoff to 90 billion. And just a small point on that, they said they've been doing this 45 billion a month, but it's actually been more like 17. So they've still been participating in the market trying to stimulate it. And so if they do go from 17 to 90 billion, that's huge financial constraints that could happen this month. So lots of things to cover between now and the end of the next quarter. But I expect, given all of the data, all of the things that are happening right now, this is going to be one of the better times in the last 5-10 years to increase your risk tolerance.
Gotcha.
Yep.
Well, speaking of the data, what do you got for us in the charts today?
Yeah. Let's see if we can get up here.
I feel
So
like I'm just crushing the segues today.
you are
Crushing the segues.
dialed in. I like that part a lot.
All right. Well, a few more people joining here, so it looks like people have found the new link, so that's good.
Yeah. So to your point, I think I've been getting increasingly more questions about this, just about what it's showing, and I know I tend to put this chart up every once in a while. I thought it'd be a good time to do it as we come into September. It's worth just revisiting this again. And the two major things that go into the economic activity are growth and inflation. These are the two main things that reflect on how asset prices are going to perform. And so as we look at the data, particularly on the screen here, we see what the forecasted numbers are that Hedgeye uses. It's actually fairly close in line with where the Atlanta Fed is right now, which is different than it's been historically. So ultimately, what it's showing you is you're seeing growth slow. And so some of the things that you look at here, if you look at Q4 of 2021, you had GDP growth of 6.9%, and Q4 of this year, the number's closer to four and change. So you might say, well, yeah, that's still excellent growth. And the answer is yes, it is. But you're getting a massive deceleration. And the market and stocks care about the future expectations. So if you get a big downward sloping deceleration, that is negative for obviously future value of stocks. And then if you look at Q1, Q2, those actually dip into negative GDP forecasts right now. So you get it. It appears that you're getting a massive deceleration in economic activity. And so why that's relevant is as we talk about the stocks, and I have this last little bit here, the stocks tend to lead the economy here. So some stocks are already showing recessionary pressures, and the data at least looks like that's where we're going. At some point, stocks and bonds fully price this in, and that is the perfect time to buy stocks. And so as we look at what's happening here, you take the two of those together, and that continues to be what the expectation is on growth.
Great.
But yeah, sorry, the last one on the rest of the data, which would be inflation. That's still that wild card that I think continues to be the geopolitical risk is playing a major part in it, because inflation is running hot, but oil's been down for 3 weeks in a row now. So will that continue or not? I think it'll be important to watch.
Yeah. I love the charts that kind of give like an insight to what the strategy is here. So this is a good one for that.
Right on. So the other, just a couple of other quick ones, which is Bank of Canada. So I talked about QT in the US, which is the opposite of QE, which is quantitative easing before, where central banks give the banks money and that's trying to stimulate. The other is QT, where they pull it back. And so this is an interesting snapshot. And this is something I actually didn't know in super detail. Just that what happened through when we got into COVID is the government of Canada said to the Bank of Canada, we need you to step in and help, so to speak. But when you have to go the other way and start raising rates, we'll make sure you're made whole if there's any losses on those bonds that you buy. So essentially, they've guaranteed the Bank of Canada not to lose money, which is an interesting nuance that happened. But the first section on here shows that the Bank of Canada's balance sheet got up to kind of 550 billion. Now we're somewhere still in the kind of the $450 billion range. Why it's relevant is this where we used to be prior to COVID. So important to still think this plays a major role in what happens to bonds and bonds prices. This other portion here is really what the government is willing to support the Bank of Canada on. So right now it's shouldering somewhere in the neighborhood of 30 to 35 billion dollars of losses that it'll cover in the event that the Bank of Canada decides to run off these bonds. So it's interesting, it's nuanced, but it's important when it comes to what's going to happen here in Canada as we move ahead.
Gotcha.
Mhm.
Okay, great. One more?
Two more quick
Two more?
ones. Two more quick ones. This is just demographics. I mean, I've talked about China quite a bit, and I do think their activity looks stronger. Yes, there's been lockdowns and things like that, but if we just look at the data, looks like China is still in a good position to growth. But at the same time, we're starting to peak from a demographics perspective. So I think this will be important to continue to pay attention to see how it evolves.
Great.
Okay. The last one I try to hit on either something, ESG or Web3 related, sometimes some educational things. But what we saw this week is Ticketmaster and Dapper Labs partnered up to sell NFT concert tickets. And so why this is interesting is they're testing this, and Ticketmaster obviously is the main place people continue to buy their tickets for concerts and sporting events and things like that. And so they have formed a partnership where they essentially all your tickets become a digital footprint that you keep forever. And so it's an interesting test to see how it goes. I think it's a likely inevitable outcome for any type of ticketing, but I thought it was interesting that Dapper and Ticketmaster formed the partnership.
That is interesting. I hadn't seen that. I would have. I'd love to know all the tickets that I've for the concerts and sporting events, stuff like that. I've been to over my life. It'd be interesting, right?
Yeah,
Wouldn't that be
absolutely.
interesting? Yeah, I
It'd
mean, a
be
lot of stuff I've probably forgotten about that would jog some memories. Great idea.
super cool idea and collection. So
Yeah.
I thought that was newsworthy to keep an eye on how that evolves.
Yeah, exactly.
Yeah. Yeah.
Well, speaking of following the path, I don't know. I'm trying to keep with the segues. What are we what are we looking to for next week?
Yeah, so next week's a big week from the perspective that everyone's coming back. The schools are back in, the traders are back, everyone's back in the system. So lots to pay attention to. given what's happened over the last couple of weeks, like I looked just before I got on the call here, and we had some pretty oversold numbers from a lot of things. So gold, spies, small cap, Shanghai, industrial metals, Nasdaq, all these things are pretty heavily oversold coming into the close today. And so I'd expect we get somewhat of a relief rally, and we'll see how that plays out. But that's what I'd expect for the first couple of days, at least Tuesday, Wednesday. Markets are closed on Monday. So that's what I'd expect, and we'll continue to watch that. The US 10-year bond continue to watch quite closely. It's in kind of that neutral trading band here. And the question is the middle of June highs that we saw, is it going to hold? Because we're starting to creep up back towards those levels. And so I'd be watching that quite closely over the next couple of weeks. I expect them to hold. So unless something materially changes. So I'd be watching that. And there's lots to do as we head into September.
Great. Okay, no questions here. Do you have anything you want to wrap up with?
I'd say the more interesting things that I saw pop up this week is, you may have caught it, that state of California officially said 2035 no gas cars will be sold in the state any longer. So I think that's pretty huge, kind of stake in the sand, so to speak, that no more gas cars in California. California is the same size as Canada from a reference perspective, so it's pretty material. We're not going to sell gas cars anymore. So I think the speed at which this is going still, some of these industrial metals that are getting beat up here will present some reasonable opportunities, like copper and lithium, some of these things that you need for batteries long term. So I'd be watching that. But I thought that was a pretty material thing that jumped out that kind of wasn't in the mainstream media that I saw.
Definitely.
Yeah.
Okay, well, I think that's it for this week. Thanks everybody for joining, and we will see you next week. Have a great long weekend.
Sounds good. Thanks. Take care, everybody.